Welcome back. Today I want to talk about the speculation surrounding the upcoming autumn 2024 budget and what the new Labour government might have in store for pensions. When speculation is high, it's easy to let emotions drive decisions, leading to impulsive financial moves that might not align with long-term goals. Taking away tax-free cash in particular has been rumoured many times over the years, but so far it's unfounded. One of my clients got himself in such a tiz about this that he took all his tax-free cash out of his pension fund, even though he didn't need it at the time and had no plan for it. Needless to say, he regretted this emotional decision when nothing happened. So, with Chancellor Rachel Reeves preparing to deliver the first Labour-led budget in over 14 years, there are plenty of rumours about potential changes. So let's explore some of these now. First, some context. As we approach the budget announcement on October the 30th, the government faces a significant fiscal challenge with a reported £20 billion black hole in public finances. While Labour has pledged not to raise taxes on working people, some people think that pensions could be a key area for reform. So what could we expect? Pension tax relief is one of the most discussed possibilities, which is a shift to a flat rate of pension tax relief. Currently, tax relief is provided at marginal rates, so 20% for basic rate taxpayers, 40% for higher rate taxpayers, 45% for additional tax rate payers. A flat rate, possibly around 30%, could benefit lower income earners while reducing advantages for higher rate earners. Auto-enrolment contributions. There's speculation that the government might increase the minimum contributions required under auto-enrolment. This could bring the UK more in line with countries like Australia, where employer contributions are significantly higher, potentially boosting retirement savings for many. The lifetime allowance and tax-free lump sum. Although the lifetime allowance has been abolished, some rumours suggest Labour might reintroduce it or change the 25% tax-free lump sum allowance. However, any such move could face substantial opposition and remains uncertain. I don't actually think that they are going to remove the tax-free cash sum. Labour may pursue policies to consolidate small pots, automatically consolidating them, making the system more efficient. This could involve merging pots below a certain threshold, simplifying management and potentially improving investment outcomes. So what might be the impact of these possible changes? Changes to pension tax relief could significantly impact higher earners who currently benefit from more substantial reliefs. This might alter retirement planning strategies for many, but it won't necessarily affect business owners who are paying company pension contributions into their plans. Any changes could also affect public sector workers, leading to further discussions and negotiations. The government aims to use pension reforms to boost domestic investment and economic growth, potentially unlocking billions for the UK economy. So while much of this remains speculative, the upcoming budget is likely to include some pension reforms. But until we know, we're advising clients to review their current situation but generally stick to their long-term plans rather than making any rash short-term decisions. So I hope that's helpful. If you have any questions, drop them in the comments below, and thank you for watching. Don't forget to like and subscribe so that you don't miss next week's video. Until then,